Alright, what's going on everyone? Today I was actually casually backtesting ES just to observe the profiles, and I actually came across a tremendous trade that occurred on the 4th of January of actually this year. I actually remembered this day, but I'll actually go over every single reference leading up to this trade. Obviously, also I'll show you guys how you can hold massive trades such as these, even though your target may be, let's say, lower in this case. I mean, higher in this case. For me, it was here, but you'll see. So, just to set a bit of context here, obviously I'm on a 2-tick chart right now on ES just to make it a bit easier for you guys, because if I go on a 1-tick, these profiles would be huge, but references are still valid, obviously. So if we go from top to bottom, we have a couple of references actually to talk about, but also we'll have to look at what is essentially left towards the downside, because that can tell us a lot about the nature of the inventory coming into all-time highs, for example, as it was in this case. So let's just go over every single one of these. So the first thing that you may notice is that these profiles right here, all of these, actually these three, and in this case the fourth one, profiles are balancing. So when you see balancing profiles, usually you'll see overlapping value area, but usually when you see balance, you gotta think immediately, okay, what are the balance rules that apply? And if you actually go over to my Discord, and then you go into important concepts, you'll see the different balance rules. So these are the different balance rules. We have essentially 4 scenarios, and in this case it's the third one. So it's a failed breakout. And why do I say that? So in this case we had 3 layers of balance. Obviously, as you can see, responsive participants are cutting off activity at the extremes. So essentially we're staying within the boundaries of balance. However, suddenly we had this basically this New Year's Eve day that essentially initiated. We had a massive spike, left a probe here with a spike base, but what happened is that it actually closed back inside of this 3-day balance. So that essentially means that if we find further acceptance back down here, that basically comes down to this third concept. This third concept that essentially says that if you fail on one side of the balance, the theoretical trade destination will become the opposite side of balance. So in this case, we failed at the top, obviously. So our destination becomes this 3-day balance low. Alright, so that is the first downside factor that we had going into today, but actually we had a couple of them. Usually when you'll see orange lines on my charts, I call them SO anomalies. It essentially stands for stick out anomalies. They don't really have a name. They're essentially just an anomaly that you'll find on profiles. If I actually draw it'll be probably a bit easier. But they're pretty common. Usually what happens is that you'll have your normal distribution, and then you have let's say one TPO or 2 that is essentially sticking out. As I was saying, okay, so this is from another session. As I was saying, usually you'll have your normal profile that looks something like that, and what you want to see on these is usually that you don't really want to see like one single TPO sticking out here, or perhaps 2 here. Usually we want to see a clean distribution, but obviously in this case it did not occur. As you can see, we have 2 M periods here that are sticking out, but also in J here we have a bit of a stick out there. Let me show you how a normal distribution would look like. Obviously in this case we're on a 2-tick, so there probably be more of them. So I'd say this distribution is pretty fair, to be honest, even though this is not super good, but overall this is a pretty good distribution. This one again has an SO anomaly here. You can see that G period sticking out. So what will happen is that usually these will tend to get revisited. So in this case, if we open here to let's say within the spike around this level, we'll look to obviously repair these anomalies before essentially doing anything else. So that's for the So anomaly, and then we have the spike-based reference. So the spike-based reference actually tells us a lot. So how do you actually draw? Well, you just essentially look where the spike essentially broke out. So in this case, it's over B's high, so it's there. It's pretty easy to understand. But what it tells us is that obviously, as a consequence of this spike, well, this spike-based reference will act as support if we come to retest it. Obviously, I don't really like the word support, to be honest, because it kind of makes you think about, okay, support resistance. No, but when you think about support in terms of value-based trading and market profile, you really want to think in terms of a good area to put your stop, right? A structural stop placement. So in this case, let's say, I don't know, I'm just giving you guys a theoretical example. If we didn't have all of this weak structure, and let's say, okay, let me actually draw here. Let's say we have a distribution like that. We have our spike base. Usually, let's say, okay, we come down here. We have a weak high here. WH, just call it weak high. We open within the spike, so that will most likely give us two-way trade or rotational activity throughout the day. So we have a bit of confluence towards the upside that we see that we're losing tempo around here. And then we can look to basically essentially place a trade here with our stop being right below this spike base reference. And why is that? Why is this actually a very, very powerful reference? It's simply because if we find acceptance below this obviously this spike base reference, well, change will occur in the market. So in this case, bearish change. So usually references that tell you about change are the most powerful. So my favorites obviously are the spike base and the afternoon high or afternoon low, but that's for another day, obviously. Then again, we have this another SO anomaly here, as I talked about. But what is really important here is that, as you can see here, you have your yellow line here, which is a POC. So usually my yellow lines are either a very prominent POC. So a very prominent POC usually means at least a 9 wide on ES. So that essentially makes it makes it very difficult for the market to diverge away from these prominent POCs. And this is simply because of the basic auction theory. When you have a lot of volume traded at certain prices, well, usually the market will want to retrade towards those prices, because the market's goal is obviously to facilitate trade, and maximal trade facilitation will obviously occur at these very I would say, as they call it, y-axis volume areas, so high volume areas, HVAs. But in this case, it isn't that. It's actually a failed POC. So failed POC, it's kind of a long topic, but to make it sweet and short, essentially this occurs when your value, neither your value area or POC migrate towards the settlement, so the closing price. So that usually tells us the market is too long. So essentially all of these people right here that are holding longs throughout the ON session, so the overnight session, it will usually be very vulnerable to liquidation, because, as I said, the market will have a pretty high probability of retesting this POC. So what they're essentially called longs in the hole, and if this were to be towards the downside, there would be shorts in the hole. So again, another confluence for us, and as you can see here, we have a blue line. These are weak or poor references. In this case, we have one TPO and G sticking out. This is simply a poor low, so an incomplete auction. The market will want to revisit this reference in order for us to essentially replace it with excess, which is a completed auction. Now, if we look at this overall, there's not much to the upside, right? The market tried to go up the entire afternoon, at least in these last 3 periods. Actually, yeah, kind of 3 or 4 periods. But they didn't get a higher value. Values actually, I would actually call it overlapping to lower, because most of our volume is actually traded below. So that's really not significant for buyers. And also, if you notice, as we talked about the failed breakout, so our destination essentially becoming the balanced low. Well, the balanced low is a poor low, right? So if we actually have pretty high probabilities of taking this out too, if we manage to get here. So, as you can see, now that we have all of our references down, what we can do is that we just look at the condition of the overnight inventory and the essentially the opening trade location. So the overnight inventory in this case is fully long. I won't show it, but I mean, actually I can if you guys want to. The overnight is fully long, so usually you could expect about a 70-75% chance of essentially an overnight inventory repair. So what I'll look for in this case, as I want to go short, is that either I essentially look for some sort of rejection where I can put my stop loss, my structural stop loss above the overnight high, so at least coming within 3 points of this high, and then I'll just look for some sort of entry there and towards the short side. Again, we don't really want to look for exactness when you're trading market profile. You just need to know roughly where you want to enter and essentially where you will put your stop. But the second entry, which would be way easier, would be simply a gap re-entry. So essentially we fill the gap very quickly, and then we essentially come back into previous range. So if we actually come back within previous range, this is why I really insisted in to making this video. Well, this is very important, because if we actually fill the gap and get acceptance within previous range, that will tell us that essentially our first target in that case will obviously be to repair this SL anomaly. But when I'm talking about destinations or target, I'm not usually talking about anomalies, but rather structural levels. So in this case, it will be our value area high, and once we get into if we actually manage to break our value area high, we really want to see acceptance below this this spike-based reference, because in that case we'll have essentially double confirmation that this market is going lower, essentially, because if acceptance is found below this spike-based reference, well, in that case, obviously, bearish change has taken place in the market, and the ultimate destination, obviously, value area low according to value area rules, but obviously, this balanced low here, which is a poor low as well. So let's just see how it plays out. I'll put in 15 speed. I'll just pause it if needed. So let's see what happens. Okay, I'll just speed it up a bit, be faster. Alright, there you go. So we got our gap re-entry. Now we're simply looking to monitor for continuation. Okay, so again, as you can see, we're trying to get acceptance back within this balanced range. So our destination right now becomes the balanced low. Obviously, when I say destination, doesn't have to get to essentially the ultimate destination, but that is the ideal scenario. Alright, alright, so there you go. The SL anomaly is one tick away from getting repaired, and we're probably gonna repair it, and there you go, we repaired it. So let me just split this. So our first anomaly is out. Again, as I said, now if we get acceptance within value area, destination becomes value area low. We really want to see acceptance below this spike-based reference. However, at first, I'll just skip a bit so we get faster through this. And as you can see, C period actually takes out the spike base. So change has now occurred in the market. We're looking to go even lower at this point. So really, as you can see, odds are really stacking up in our favor if we're short right now. Again, as you can see, SL anomaly repaired, failed POC, had a high probability of getting repaired. Well, it actually got repaired, and there you go, value area low. Well, there you go, it got taken out. So this really shows the importance of monitoring for continuation, because if I used a let's say I would say a hard take profit, hard target, so which is not flexible, that's what I'm kind of trying to get to. Well, in that case, I would have just exited at the first anomaly. But I really want to see if initiative continues, and if we get acceptance beyond essentially crucial references that will tell me about change in the market. So at this point, my next reference is obviously the balanced low, which is a poor low, and if we get acceptance below it, we might continue low. As you can see, boom, just took it out just like that. And at this point, we really just want to ride this move. This is very high volume, very high tempo, very high momentum. Okay, didn't want to do that. There you go. This is very high momentum, so this is obviously one time framing. We've been one time framing for three periods now, and I would call this initiative obviously most likely long-term money moving this market as of now. And obviously you don't want to get out of this market until liquidity is found on the opposing responsive side. So usually what will happen when liquidity is found is that we'll start a bit balancing a bit, two-way trading, two-time framing. So yeah, let's see. Again, we have another weak reference here that came from a previous profile there. Let's see if we can repair it. Alright. Okay, let's just skip a bit, and okay, there you go. EPR took it up, and at this point we don't really have many references left, except this this one down all the way down there. Let's see if we can make it. Again, as I said, we really don't have any risk right now because, as I said, we don't want to get out of initiative one-time framing as long as liquidity isn't found, and liquidity hasn't been found yet. Responsive buyers are yet to be seen in this market. Really, if we start two-time framing a lot here, I'll most likely get out. So let's see what we're doing here. If we can take out this low, but as you can see, F is kind of leaving excess here. Most likely we're getting into some responsive buyers. At this point, I would most likely take out most of my position. Let's see. Yeah, I think that's a good call here because we're kind of getting into some liquidation here. So either way, so overall, if we look from top to bottom, this essentially covered every single week reference in like a month's time, but in a single day. Yep, so overall from the high to the low, it's about 100 points, as I said. This really shows the importance of references that actually show you depict change, right? But also the really massive important. I can't stress this enough, guys. The importance of monitoring for continuation, because this could increase your profits by well, a lot, as you can see here, if you catch one of these days. So yeah. Again, don't forget to join the free Discord. We have some good stuff in here. Also, I offer a mentorship if you guys are interested. Shoot me a DM on Discord. And yep, I'll see you guys in the next video. I hope this video was helpful. And yep, I'll see you guys.